When you step into the market, the first battle you fight isn't with the chart, the trend, or the price. It's with yourself. The market doesn't test your strategy, it tests your state of mind. Every tick, every fluctuation, every sudden shift in momentum is a mirror reflecting your beliefs, your fears, your expectations. Most traders think they are here to predict where the market will go next. But the truth is, the market doesn't care where you think it should go. It will do what it does, indifferent to your logic, your hope, or your analysis. That's why mind over market isn't a concept, it's a discipline. It's the recognition that consistency and control come not from mastering the market, but from mastering your own mental framework. A trader's success isn't built on finding the perfect system or following the right guru. It's built on emotional balance and psychological flexibility. You can have the most advanced tools, the fastest data, and still lose, because the real edge is internal. It's the ability to stay calm in chaos, confident, certainty, and detached from the outcome. The market is neutral. It doesn't reward intelligence. It rewards discipline. Most traders fail because they interpret market movement through the lens of fear or greed. They don't see what's there. They see what they want to see, what they need to see. That's not trading, that's reacting. Mind over market is about learning to think in probabilities, not possibilities. It's about accepting that you don't need to know what's going to happen next to make money. You just need to execute flawlessly when your edge presents itself without hesitation, without emotional interference. The market offers endless opportunities, but only to those who are psychologically prepared to take them. When your mind is aligned with the reality of the market, you stop forcing trades, you stop chasing wins, and you start responding objectively. You begin to act from a place of awareness rather than impulse. Every trade you take is an expression of belief. If those beliefs are rooted in fear of loss, you'll sabotage yourself. If they're built on the need to be right, you'll hold on to losers too long. But if they're grounded in acceptance that anything can happen, you become free. You detach from outcome and connect with process. You stop being the victim of market movement and start becoming the observer of it. That's the real transformation, shifting from emotional participation to objective perception. When you master your mind, the market stops being a source of anxiety and becomes a source of opportunity. Every fluctuation becomes information, not intimidation. Every loss becomes feedback, not failure. Mind over market is not about controlling what happens, it's about controlling how you respond. Because once your thoughts, emotions, and actions are aligned with the truth of the market, consistency follows naturally, not through force, but through flow. The market is a mirror that reflects not what you know, but who you are. Every trade you take, every decision you make, and every reaction you have to price movement reveals your mindset in its purest form. The charts don't test your technical knowledge, they expose your emotional discipline. What you perceive in the market is filtered through the lens of your beliefs, fears, expectations, and desires. If you approach the market seeking validation, it will give you doubt. If you approach it with fear, it will show you loss. The market doesn't hide the truth. It simply reflects the internal state of the trader engaging with it. This is why two traders can look at the same chart, the same data, and the same setup, yet come to completely different conclusions. One sees opportunity, the other sees danger. The difference isn't in the chart, it's in the mind interpreting it. When you understand that the market reflects your mindset, everything begins to change. You start to realize that consistency is not about predicting the future, but managing yourself in the present. You see that losses don't define you, your reaction to them does. If you interpret a losing trade as personal failure, you'll carry emotional baggage into your next decision. You'll hesitate when you should act or act impulsively when you should wait. This internal turbulence makes you inconsistent, not because your strategy stopped working, but because your state of mind did. The market rewards the trader who remains emotionally balanced regardless of outcome, because balance allows clarity. The more emotionally charged you are, the less objectively you can see what the market is truly communicating. Every moment in the market is neutral. Price moves up or down, that's all it does. But your mind gives those movements meaning. You label them as good or bad, profit or loss, success or failure. Those labels trigger emotions, and those emotions influence your behavior. When fear or greed dominates your decision making, you're no longer trading the market, you're trading your emotions. You might think you're responding to price, but you're actually reacting to your internal discomfort. This is the invisible loop that keeps most traders trapped. They're constantly trying to control the market to avoid feeling pain, but the market cannot be controlled. The only thing that can be managed is your internal response to it. To see the market clearly, you have to remove your mental filters. These filters are formed by your past experiences, your wins, losses, mistakes, and emotional scars. Each one shapes how you interpret what's happening now. For example, if you've recently taken a big loss, your mind might subconsciously avoid risk even when a valid setup appears. You'll tell yourself the conditions aren't right, but what's really happening is your fear of pain is overriding logic. Similarly, after a string of wins, you might feel invincible and start taking trades outside your plan, believing the market owes you more. That's not confidence, it's ego disguised as intuition. In both cases, your mindset determines your perception, and your perception determines your actions. When you detach from emotional interpretation, the market starts to make sense in a completely new way. You begin to notice that patterns repeat, not because of magic, but because human behavior repeats. The market is the collective psychology of everyone participating in it. Fear and greed cycle endlessly, creating waves of opportunity for those who can remain emotionally detached. If your mind is clear, you can recognize those waves and ride them without resistance. If your mind is clouded, you'll fight them, chase them, or miss them entirely. This is why the internal state of a trader is far more powerful than any external tool. The tools show you data. Your mind determines what that data means and how you act upon it. It's easy to believe that more analysis, more indicators, or more information will lead to better decisions. But the truth is, the more information you try to process through a distorted mindset, the more confusion you create. The key is not adding more, but removing distortion. A calm and focused mind can make sense of simplicity simplicity. A fearful mind complicates everything. The market isn't hiding secrets from you, it's showing you everything in plain sight. But to see it, you must first silence the noise within. When you stop projecting your expectations onto the market, you start to perceive its rhythm as it truly is, neutral, flowing, and balanced. Every reaction you have while trading is feedback about your internal state. If you feel anxious when you're in a trade, it's not the market creating anxiety, it's your perception of uncertainty. If you feel euphoria after a win, that same emotion can blind you to risk on the next trade. Both emotions come from attachment. When you believe the market owes you something, you attach your self-worth to its outcome. That attachment makes you vulnerable. A professional mindset sees the market as a probability environment. Each trade is just one event in a series of many. The outcome of one trade has no power over the next unless you allow it to. Developing this level of mental discipline doesn't happen overnight. It requires constant observation of your thoughts, your reactions, and your impulses. You have to treat every trade as a mirror reflecting your current level of self-mastery. When frustration arises, it's not because the market is unfair. It's because your expectations were out of alignment with reality. When fear arises, it's not because the market is dangerous. It's because your mind is focused on avoiding pain rather than executing your plan. The more aware you become of these patterns, the less control they have over you. In the end, the market gives you exactly what your mindset attracts. If you operate from fear, you will experience loss and frustration. If you operate from ego, you will experience cycles of highs and crashes. But if you operate from awareness, neutrality, and discipline, you will experience consistency. The charts will stop being emotional triggers and start becoming tools for decision making. The market is not your enemy, it's your reflection. When your mind is calm, the market appears calm. When your mind is chaotic, the market appears chaotic. Nothing changes out there, it all changes within you. Discipline and emotional control form the foundation of consistent success in the market. Without them, every strategy, system, or method eventually collapses under pressure. The market doesn't reward intelligence, it rewards composure. It tests your ability to remain stable when uncertainty surrounds you, to stay objective when money is on the line, and to act according to plan even when your emotions scream otherwise. Most traders fail not because they lack knowledge, but because they can't control themselves when it matters most. Every trade becomes a test of psychological strength, not technical skill. The discipline to follow your process and the control to manage your emotions in the face of volatility are what separate the consistent trader from the impulsive one. When you have no discipline, the market exposes it instantly. You break your rules, you chase trades, you over leverage, and you react instead of respond. You may convince yourself that the next opportunity will make up for the last mistake, but this only deepens the cycle of emotional trading. A trader without discipline moves from confidence to panic and back again, constantly driven by the outcome of the last trade. This roller coaster drains mental energy and destroys focus. The disciplined trader, on the other hand, understands that consistency is not about being right on every trade, it's about acting right every time. They follow their process regardless of the result, because they know that in the long run, discipline compounds into profitability. Emotional control begins with awareness. You can't manage what you refuse to acknowledge. Fear, greed, frustration, and impatience are natural responses, but they become dangerous when they control your actions. When a trade goes against you, fear tries to take the wheel, pushing you to close early or reverse impulsively. When a trade goes in your favor, greed whispers that you should hold a little longer, even when your exit signal is clear. These emotional impulses feel logical in the moment because they are driven by survival instincts. But in trading, reacting emotionally is the same as trading blindfolded. The disciplined trader observes the emotion but does not obey it. They recognize the feeling, accept it, and return focus to the plan. True discipline is not built through force, it's developed through repetition and awareness. Every time you follow your rules, even when it's uncomfortable, you strengthen the neural pathways of discipline. Every time you resist emotional impulses, you build psychological muscle. The market will constantly test your patience, your confidence, and your ability to stay centered in uncertainty. It will tempt you to deviate from your plan, offering short-term gratification that leads to long-term regret. But each moment of restraint reinforces your mastery. Discipline is not a restriction, it's freedom from chaos. It allows you to operate in a state of control where emotions no longer dictate your performance. Without emotional control, your perception of the market becomes distorted. You stop seeing setups as probabilities and start seeing them as personal challenges. You begin to associate every win with validation and every loss with failure. This emotional dependency leads to impulsive decision-making, revenge trading, and overconfidence. You start trading your emotions rather than your edge. The disciplined trader avoids this trap by maintaining neutrality. They understand that the market owes them nothing and takes nothing personally. Every trade is simply a reflection of opportunity and probability, not a statement about their ability or worth. This neutrality allows them to remain calm under pressure and make clear decisions when others are driven by fear. Control over emotions doesn't mean you eliminate them. It means you understand them deeply enough that they no longer control your behavior. You learn to notice subtle shifts in your state, the tension in your chest before a risky trade, the rush of excitement after a win, the anxiety when price moves too fast. These sensations are signals, not enemies. By observing them without resistance, you create space between emotion and action. That space is where discipline lives. It's the difference between reacting impulsively and responding intelligently. The moment you can pause and observe your emotional reaction before taking action, you gain power over your decisions. The disciplined trader operates from structure. They have defined rules for entry, exit, risk, and reward. These rules are not flexible to emotion. They are built on logic and probability. When you trade with structure, You remove the need to make decisions in the heat of the moment. You already know what to do, you simply follow the plan. This eliminates confusion and reduces emotional influence. Most traders fail because they make decisions under stress, trying to interpret data while battling internal chaos. The structured trader doesn't need to think, they need to execute. That consistency of behavior produces consistent results over time. Discipline also means accepting boredom. The best trades are often the ones you wait patiently for, not the ones you force. The market rewards patience, not activity. Impulsive traders feel the need to always be in a trade because they equate movement with progress. But discipline teaches you that progress comes from precision, not constant action. Sitting on your hands while waiting for confirmation is often harder than clicking the buy or sell button. It requires trust in your process and the ability to stay emotionally detached from the market's noise. Every moment you resist the urge to act without reason, you strengthen your edge. Another aspect of emotional control is managing expectations. When you expect the market to behave according to your analysis, you set yourself up for frustration. The market moves according to collective behavior, not individual desire. Discipline allows you to remain objective even when the market defies logic. You don't fight it, you adapt. You accept uncertainty as part of the game and focus on execution, not prediction. Emotional traders fight against reality, try and impose their will on something uncontrollable. Disciplined traders align with reality, flowing with the market rather than resisting it. The connection between discipline and consistency is direct. When you control your actions, you control your results. Every undisciplined moment, every impulsive trade, every emotional decision breaks the chain of consistency that builds success. The disciplined trader measures success by how well they followed their plan, not by the size of their profit. This mindset shift is what allows them to stay calm through drawdowns and focus through winning streaks. Emotional control prevents overconfidence after wins and despair after losses. It keeps performance stable in a world designed to create instability. The ultimate goal of discipline is to reach a state where emotions exist but no longer interfere. You feel the fear, but it doesn't control you. You feel the excitement, but it doesn't influence your execution. You act with intention rather than reaction. That is where true consistency begins. Discipline is the invisible structure holding every professional trader together. It's not glamorous, it's not exciting, but it's the foundation upon which long-term success quietly builds. Thinking in probabilities is the defining mindset that separates a professional trader from an emotional one. It's the ability to approach every trade with the understanding that the outcome is uncertain, yet the process remains consistent. Most traders enter the market trying to predict what will happen next, believing that certainty is the path to success. They search for signals that guarantee profits, patterns that always work, and systems that remove risk. But the market doesn't operate on certainty, it operates on probability. Every trade is just one event within an infinite series of random outcomes. And once you truly internalize that, your relationship with the market transforms completely. When you think in probabilities, you stop needing to be right. You stop associating your self-worth with the result of a single trade. You begin to view each trade as just one execution in a sequence of statistically defined opportunities. You know that even with an edge, some trades will lose, and that's perfectly acceptable. The goal is not to win every time. The goal is to consistently execute your edge over time so that the law of large numbers works in your favor. This mindset frees you from the emotional roller coaster of winning and losing because your focus shifts from outcome to process. You start to measure success by how well you followed your rules, not by the size of the profit or loss. The reason most traders struggle to maintain consistency is because they still think in terms of certainty. They want to know what the market will do next before they act. They analyze every move trying to find a pattern that ensures the next trade will win. This is an illusion. The market doesn't offer guarantees, it offers opportunities. Probability thinking acknowledges that anything can happen at any time. No matter how perfect a setup looks, no matter how confident you feel, the result remains uncertain. This acceptance allows you to trade without emotional attachment, because your decisions are no longer based on the need to be right, they're based on executing your plan regardless of the outcome. When you understand probabilities, you begin to interpret losses differently. A losing trade isn't a mistake if it followed your system, it's simply part of the distribution of outcomes. The problem arises when traders take a loss personally. They start questioning their method, doubting their ability, and making impulsive changes to recover quickly. This emotional reaction breaks the consistency of execution, which is what truly drives success. Thinking in probabilities allows you to see losses normal, expected, and even necessary. Each one is feedback, not failure. Each one keeps you aligned with statistical reality rather than emotional distortion. The concept of probability also helps you manage expectations. When you know that your edge might only produce profitable results 60% of the time, you stop panicking over the 40% of trades that don't work. You understand that those losses are already part of the equation. You stop trying to avoid them because you realize they can't be avoided, they must be absorbed. This mental shift prevents revenge trading and emotional overreactions. Instead of chasing the next big win to make up for the last loss, you focus on executing the next trade with precision. Over time, this detachment from short-term results creates long-term growth. Thinking in probabilities also changes how you perceive risk. Instead of seeing risk as something to fear, you begin to see it as the cost of doing business. You accept that every trade carries uncertainty, but you define how much you're willing to lose before you even enter. By controlling your risk per trade, you control your exposure to emotional volatility. You're no longer reacting to the market, you're managing your response to it. This balance between acceptance of uncertainty and control over exposure is what keeps professional traders grounded. They don't fear losses because they've already accounted for them within their plan. When you shift your perspective to probabilities, patience becomes natural. You stop forcing trades out of boredom or fear of missing out. You realize that not every opportunity aligns with your edge, and that missing a trade is better than taking a bad one. This patience builds confidence not from prediction, but from consistency. You no longer feel pressured to act constantly because you understand that your edge doesn't need to appear all the time. It just needs to be executed faithfully when it does. The professional mindset isn't about doing more, it's about doing less, but with precision. Thinking probabilistically also eliminates the illusion of control. Most traders believe that by analyzing more or studying longer, they can somehow predict the future movement of price. But the market's randomness ensures that no analysis can remove uncertainty. Accepting this truth frees you from the mental burden of trying to be perfect. You stop fighting against randomness and start working with it. You begin to trust your process, not your predictions. This trust allows you to act decisively because your confidence is based on discipline, not on the outcome of the next trade. Every moment in the market is a probability event. Price movement is the reflection of countless participants acting on their own beliefs, emotions, and expectations. You can never know what everyone else will do next, but you can know how you will respond. This is where your power lies. Thinking in probability shifts your focus inward, from trying to control the market to controlling yourself. You stop trying to impose order on something inherently uncertain and instead master your ability to function within that uncertainty. This is the mindset that allows you to thrive in an environment where most people fail. When traders refuse to think in probabilities, they trap themselves in emotional cycles. After a few wins, they start believing they've figured it out, and their confidence turns into overexposure. After a few losses, they panic and change systems, seeking new certainty. This constant swing between hope and fear destroys consistency. The probabilistic trader avoids this entirely. They don't see themselves as winners or losers. They see themselves as operators executing a system within a random environment. Each trade is just one roll of the dice within a controlled risk framework. Over hundreds of rolls, their discipline and edge generate profitability. Embracing probability also brings peace. It removes the constant tension of needing to be right. You no longer chase perfection, you pursue execution. You accept that the market will sometimes reward bad decisions and punish good ones, and that's okay. Your focus becomes longevity, not instant gratification. You stop trying to predict outcomes and start managing them. You begin to see the market not as an adversary, but as a field of opportunity, governed by uncertainty but navigable through discipline and mindset. Thinking in probabilities ultimately rewires the way you approach trading and decision making. It trains your mind to detach from individual outcomes and focus on patterns over time. It forces you to let go of emotional highs and lows, replacing them with steady awareness. It transforms your perception of losses from pain into data and your perception of wins from excitement into confirmation of discipline. The market stops being chaotic because your mind stops demanding certainty. Instead of fearing randomness, you operate harmoniously within it, guided by logic, structure, and emotional balance. Detaching from outcome and focusing on flawless execution is the mental shift that turns trading from a game of emotion into a process of precision. Most traders enter the market with their attention fixed on one thing: the result. They measure every action by profit or loss, every decision by whether it made money or not. This obsession with outcome is what creates emotional instability. When a trade wins, they feel validated. When it loses, they feel attacked. Their confidence rises and falls with every fluctuation in equity. The irony is that this very attachment to outcome prevents them from achieving consistent results. The more emotionally tied you are to the result, the less control you have over your process. The true professional learns to reverse this dynamic by giving complete focus to execution while letting go of the outcome entirely. The essence of trading mastery lies in execution. Every decision you make before, during, and after a trade defines your edge. But execution can only be flawless when it's free from emotional interference. When you're attached to the outcome, you unconsciously alter your behavior to avoid pain or chase pleasure. You move stops, close early, hesitate on entries, or force trades out of fear of missing out. Each of these actions erodes consistency and introduces randomness into your performance. Detachment allows clarity. It frees your mind from the noise of expectation so you can act purely according to your system. You stop reacting to what you hope will happen and start responding to what is actually happening. Focusing on execution doesn't mean ignoring results. It means understanding that results are the byproduct of process. You cannot control whether the next trade wins or loses, but you can control how well you execute it. The best traders measure success not by whether a trade was profitable, but by whether it was executed according to plan. This shift in perspective builds mental resilience. A losing trade executed perfectly is still a success because it aligns with the long-term edge. Over time, this approach compounds into consistency. You begin to trust your discipline more than your emotions. The fluctuations of the market stop influencing your state of mind because your satisfaction comes from precision, not outcome. Detachment from outcome also requires acceptance of uncertainty. Every trade is a probability event, and no setup guarantees success. The moment you enter a trade, the outcome is out of your control. The only control you retain is over how you manage it, your risk, your stop, your target, and your adherence to rules. When you accept this, you release the psychological need to manipulate or predict the result. You stop clinging to the illusion of control and begin operating in alignment with reality. That acceptance creates freedom. You stop resisting what the market does and start flowing with it. You no longer judge yourself by short-term results, but by the consistency of your behavior. Emotional detachment is not cold indifference, it's mental balance. It's the ability to remain steady in both victory and defeat. When you're attached to the outcome, a win inflates your ego and a loss damages your confidence. Both reactions distort perception and influence future decisions. Detachment keeps you centered. You learn to see both wins and losses as data points within a larger statistical sequence. This neutrality prevents overconfidence after success and despair after failure. It keeps your decision-making sharp, consistent, and objective. The less emotion tied to outcome, the more accurately you can interpret market behavior without bias or distortion. To cultivate this mindset, you must develop a strong internal focus. Most traders look outward, toward charts, indicators, and news, believing these external factors determine success. The detached trader looks inward. They understand that execution is an internal process governed by clarity, confidence, and control. You can't execute flawlessly when your mind is clouded by hope, fear, or frustration. Every time you attach to outcome, your emotional energy divides your focus. Half of your attention is on the trade, and the other half is on what it means for your ego or account balance. Flawless execution requires total presence in the moment where your only concern is following your plan with precision and discipline. One of the most powerful aspects of detachment is that it eliminates pressure. When you stop measuring yourself by results, You remove the emotional weight that leads to impulsive decisions. You no longer need the market to do anything for you. You stop chasing trades to prove something, to recover losses, or to validate your skill. You simply execute. This absence of pressure allows you to see clearly and act objectively. You start to notice that opportunities reveal themselves more easily when your mind is calm. The market rewards clarity, and clarity only exists when emotion is absent. Every moment of attachment creates distortion. When you want to trade to win, you start interpreting data to confirm your desire. You ignore warning signals and hold on to false hope. When you fear loss, you close trades too early or avoid valid setups. Both forms of attachment create inconsistency. Detachment allows you to see the market as it is, not as you wish it to be. It restores objectivity by removing emotional filters. You no longer react to price movement as a threat or a promise. You simply observe it as information. This perspective transforms the way you interact with the market. You stop being controlled by it and begin to operate in harmony with it. Detaching from outcome also builds patience. You no longer feel the need to trade constantly because you're no longer chasing results. You understand that your only task is to wait for high probability setups that fit your plan and then execute them without hesitation. Patience becomes effortless when your satisfaction comes from discipline instead of profit. The market's fluctuations no longer dictate your actions, your system does. You act when the conditions align and remain still when they don't. This controlled behavior leads to consistency, and consistency is what produces profitability over time. Flawless execution is an art of repetition. It's not built in a single moment of discipline, but through hundreds of moments where you choose control over impulse. Every time you follow your rules, even when it's uncomfortable, you reinforce your professional identity. Every time you deviate, you weaken it. The goal is to make disciplined behavior so habitual that it becomes automatic. When detachment becomes part of your identity, trading transforms from emotional reaction to deliberate execution. You no longer need to rely on willpower to stay disciplined because your mindset operates from alignment, not resistance. Focusing on flawless execution also means embracing mistakes as part of growth. When you detach from outcome, you can analyze errors without ego. You no longer defend your actions emotionally, you evaluate them logically. You see what went wrong, adjust, and move forward. This creates continuous improvement because you're no longer blinded by emotional self-judgment. Mistakes become stepping stones instead of setbacks. Each one refines your process, sharpens your awareness, and strengthens your discipline. The paradox of trading is that the more you focus on results, the harder they are to achieve. But when you focus on process and execution, results naturally align. Detachment allows you to access that flow state where actions are precise, calm, and consistent. It's the state where analysis, execution, and psychology merge seamlessly. You stop forcing trades, stop chasing outcomes, and begin trading from intuition grounded in structure. You become the observer rather than the participant in chaos. The market becomes less of a battlefield and more of a landscape to navigate with clarity and control. Mastering yourself is mastering the market because every fluctuation, every opportunity, and every challenge that appears in trading is a direct reflection of your internal state. The market is neutral. It doesn't reward intelligence or punish ignorance. It simply reflects behavior. If you are disciplined, patient, and emotionally balanced, the market mirrors that stability. If you are impulsive, fearful, or greedy, the market mirrors that instability. The key to consistent success is not in predicting price movement, but in mastering the internal forces that shape your decisions. Your thoughts, emotions, and beliefs determine how you interpret information and how you act upon it. The external world of charts and price action is nothing more than a projection of your inner psychology. Self-mastery begins with awareness. You cannot control what you don't understand. Every decision you make in the market is influenced by subconscious patterns, habits formed from past experiences, wins, losses, and emotional conditioning. You may think you are acting rationally, but most trading behavior is driven by emotion disguised as logic. Fear of missing out, the need to recover losses, the urge to prove something, or the craving for excitement all lead to impulsive actions that break discipline. When you start observing your thoughts and emotional triggers without judgment, you begin to separate yourself from them. That separation creates control. Instead of being swept away by impulses, you can recognize them, pause, and choose your response consciously rather than react automatically. The greatest challenge in trading is not market volatility, it's internal volatility. The market's movements are constant, unpredictable, and uncontrollable. The only element within your control is how you respond. Mastery means training your mind to remain calm when uncertainty rises, to stay composed when money is on the line, and to execute your plan even when emotions scream otherwise. Every time you act out of emotion, closing too early, holding too long, chasing trades, you give power to fear and greed. Every time you act out of discipline, you reclaim that power. Over time, this repetition shapes a mental environment where calmness becomes your default state. Emotional stability in trading isn't about eliminating feelings, it's about understanding them deeply enough that they no longer interfere with execution. The professional trader doesn't suppress fear or greed, they recognize them as natural human responses and manage them with awareness. Fear tells you to avoid pain, greed tells you to seek pleasure, and both are survival instincts. But survival instincts don't serve you in a probability-based environment. The market doesn't care about your comfort, it responds to collective behavior. To master yourself, you must retrain your instincts to function within a probabilistic reality rather than an emotional one. You learn to accept uncertainty instead of resisting it, to embrace loss as part of the process rather than a threat to your identity. Self-mastery also means taking full responsibility for everything that happens in your trading. The undisciplined trader blames the market, the broker, the news, or the system. The disciplined trader looks inward. They know that mistakes are not failures, but feedback. Every error reveals something about their mindset, impatience, fear, doubt, or overconfidence. Taking responsibility removes the illusion of victimhood and places control back in your hands. It forces you to address the real issue, not the market, but but your reaction to it. This level of ownership creates empowerment because you realize that improvement doesn't depend on external conditions, it depends on internal refinement. When you master yourself, you begin to see the market differently. You no longer view it as an adversary to conquer, but as an environment to understand. You stop fighting against price movement and start flowing with it. You stop needing to be right and start aiming to be consistent. The pressure to prove something disappears because your confidence no longer depends on outcomes. It comes from your ability to stay centered regardless of them. The internal calm that comes from self-mastery allows you to operate from clarity. You can read the market objectively without distortion because you are no longer projecting your fears and desires onto it. The process of mastering yourself requires patience and repetition. You cannot reprogram years of emotional habits overnight. Every trade becomes a lesson in awareness. You observe your reactions, your thoughts, and your impulses as they arise. You learn what triggers anxiety, what triggers overconfidence, and what leads to impulsive decisions. You start to notice the patterns within yourself as clearly as you notice patterns on a chart. Once you can see them, you can adjust them. Over time, you build emotional resilience, the ability to face uncertainty without losing composure. This resilience becomes your greatest edge because it keeps you consistent when others are falling apart. Mastery is also about balance. The market constantly pulls you between extremes, fear and greed, patience and impulsiveness, confidence and doubt. Without balance, you swing from one emotional state to another, reacting instead of responding. Balance means staying grounded in both winning and losing streaks. You don't allow success to inflate your ego or loss to destroy your confidence. You treat both as temporary conditions within a larger process. This equilibrium keeps your focus on execution rather than emotion. It prevents overtrading after a win and hesitation after a loss. You remain aligned with your system because your emotional state no longer dictates your behavior. Another part of self-mastery is detachment from the need for control. Most traders suffer because they try to control what cannot be controlled. They want the market to move according to their analysis, to validate their opinions, to follow their plan perfectly. But the market has no obligation to cooperate. The more you try to control it, the more frustration you create. Mastery means letting go of that need and redirecting focus toward what is controllable. Your risk, your execution, your mindset. You realize that peace comes from surrender, not domination. By allowing the market to be what it is, you align yourself with reality instead of resisting it. When you master yourself, trading becomes simple, not easy, but simple. The complexity of indicators, systems, and analysis fades in comparison to the clarity of a calm mind. You don't need constant confirmation or reassurance. You act when conditions align, manage risk intelligently, and accept whatever outcome follows. You become less reactive and more deliberate. You understand that consistency is not built through intensity, but through control. The small, repeated acts of discipline, following stops, respecting rules, waiting patiently, accumulate into stability. Self-mastery turns trading from a struggle into a flow where action feels effortless because it is rooted in awareness, not emotion. Ultimately, mastering yourself means mastering perception. The way you interpret what happens in the market determines your emotional response. If you perceive a loss as failure, it triggers fear. If you perceive it as feedback, it triggers learning. The event is the same. The meaning changes everything. This shift in perception is what gives you power over your emotions. You can't control the market's behavior, but you can control how you define it. When your perception aligns with truth rather than emotion, your decisions become clear, confident, and consistent. You stop fighting yourself, and when you stop fighting yourself, the market stops being a battlefield.